FTX files for bankruptcy and more lending platforms are pausing withdrawals. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. As always, this is not financial advice and we wish you the best of luck in your crypto ventures. Now, let's get into the news. Bitcoin could be in for an even rougher week next week as over 80,000 Bitcoin leaves exchange wallets as traders are losing confidence in centralized exchanges. Typically, Bitcoin leaving exchanges is a good thing, indicating long-term holding. However, at the same time, only 50% of Bitcoin holders are in profit and the price may be dropping even more. The production cost of Bitcoin has historically acted as a floor for the Bitcoin price. However, at the moment it costs $15K to produce a Bitcoin and miners are losing money on it. Therefore, miners are sitting idle and have to sell their Bitcoin to stay afloat. It's likely that we revisit the $13K low production cost of Bitcoin as the difficulty of Bitcoin mining adapts every 2 weeks to however many miners are working. With the high energy costs combined with the collapse of FTX and many other crypto companies, we could very well see the $13K price coming soon. FTX files for Chapter 11 bankruptcy this morning for FTX, FTX US, and Alameda Research. This comes just a day after Sam said FTX US was completely fine and had no issues with liquidity. The FTX group, which has 130 additional companies affiliated, has started a voluntary Chapter 11 proceedings in the US in order to process, review, and monetize assets for the benefits of global stakeholders. Sam Bankman-Fried resigned as CEO of FTX, appointing John J. Ray, and Sam will remain to assist in the transition. He then came out on Twitter soon after, saying that this doesn't necessarily have to mean the end for the companies or their ability to provide value and funds to their customers. We're still waiting to see how this plays out for users' funds on FTX. However, if it goes to court, it could be many years. Crypto lending platform BlockFi announces withdrawal freeze based on the lack of clarity from FTX and Alameda Research. The feared FTX contagion has already begun to spread, and it seems BlockFi is the first. BlockFi also told clients to not deposit to its wallets or interest accounts. BlockFi and FTX US announced this past July that the companies had agreed to a deal where FTX US would provide BlockFi a $400 million credit facility, which would also allow the crypto exchange the right to acquire BlockFi. This deal seems to have been thrown into doubt after the revelation that FTX, the global company linked to FTX US, had a $10 billion hole in its books. Genesis Trading, an institutional digital assets trading and derivatives company, also shared that they had $175 million locked in FTX. And while they say it doesn't impact their market-making activities, others disagree. A user on Twitter pointed out that Gemini, the crypto exchange by the Winklevoss twins, uses Genesis Trading for all of their earn programs. As of now, Gemini has not said anything regarding the FTX meltdown, but it's safe to assume many exchanges are going to feel some sort of aftershock, and it's best to not have your crypto on any exchanges for the time being. A lot went down in the Bahamas yesterday, where FTX International is located. First off, the Bahamas securities regulator froze some assets of the exchange in what's known as a provisional liquidation, where assets will be safeguarded for the time being. They said that they're committed to working to obtain the best possible outcome for the customers and other stakeholders. But sadly, if this is anything like Mt. Gox, it could take years for customers to get their money. FTX wallet trackers yesterday saw some users being able to withdraw money, and many had assumed FTX had turned on withdrawals again, only to find out it was only for locals in the Bahamas. As users scramble to contact locals in the Bahamas to get their money out, others are apparently bypassing the internal balance transfers block by selling NFTs on FTX's marketplace. Accounts in the Bahamas are creating NFTs, and users from around the world are purchasing the NFT with their full account balance. We see some NFTs like this random ape that sold for $10 million. Some are saying this is completely illegal and users will get caught. Whether or not it is, we'll find out soon enough. JP Morgan warns the FTX collapse will spark a cascade of margin calls. They said, given the size of FTX and Alameda Research and their interconnectedness with other crypto ecosystems, including DeFi, it looks likely that a new cascade of margin calls is in the cards. This is similar to that of the Luna collapse back in May. You can see here the total crypto market cap on May 7th and how over the next 45 days it dropped over 54%. We're in a similar situation right now. However, it's likely to be less in dollar value just because so many have already deleveraged out of crypto since then. They go on to say it will likely drop from the $1 trillion market cap we were at before this started to about $500 billion when it's done. FTX had also been the preferred exchange over Binance by institutional clients like hedge funds, and these events will likely change the way institutional investors interact with exchanges to ensure assets are protected. JP Morgan says it's encouraging that many of the top exchanges have issued statements that they would be publishing their Merkle Tree reserve certificates to increase transparency. Binance recently released their wallet addresses of over $69 billion in crypto reserves and says they're working to share more of its proof of funds in the coming weeks. The crypto markets may not be the only thing affected if FTX goes bankrupt. The crypto exchange has a long list of sports marketing deals that may soon disappear. FTX has struck deals around the world with major athletes and sports franchises. Last year, they paid $135 million to rename the NBA Miami Heat Arena to the FTX Arena for the next 19 years. FTX also struck a sponsorship with the MLB to put the FTX logo on every jersey of an umpire. They also had major deals with NFL Tom Brady and NBA Steph Curry, some of these deals being an equity stake in the company that is now valued at $1. Equity stakeholders include Steph Curry, Shaq, Tom Brady, and Naomi Osaka, to name a few. Tom Brady and his ex-wife are said to put $650 million of their own money into FTX as well. It'll be interesting to see how this plays out for all of these sports deals. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.